Hello again, everybody. This week, we are going to talk about cryptocurrency.
What did you say?
Well, you heard me, Ron Burgundy. That's right. We are going to talk about crypto in general and maybe even talk a little bit about Bitcoin specifically. But I got to be careful here because let me tell you something. When anyone who has their professional financial advisor hat on and goes to their compliance people and say, hey, I'd like to write something about Bitcoin or I want to talk about cryptocurrency, man, their guard goes up right away. And it's not really on them per se. These are federal rules and regulations, believe it or not, in this very nascent industry of cryptocurrency that keeps us from coming right out and either recommending it or saying you shouldn't buy it. We have to be very general in nature. But guess what, folks? Even if I could tell you my very specific recommendation on anything related to cryptocurrencies, I really wouldn't have one. Honestly, I'm pretty agnostic about that, which you're going to learn. But I don't really need an opinion because what I'm going to talk about today are some of the do's and the don'ts and really what Bitcoin is and what it is not. So stay with me because I think you're going to learn some things that go against what you've been told about Bitcoin and cryptocurrency. You better understand that before you even think about getting close to it. Okay, so let's start with what Bitcoin is not. First of all, it is not a digital dollar that's going to replace the U.S. greenback. Stop the nonsense. That's not going to happen. Now, folks, I don't know what the world is going to look like 50 years from now, 100 years from now. You don't either. So I can't tell you what kind of digital dollar or lack thereof we may have a half a century from now. I won't even be here. So I'm referring to right now, next month, next year, this decade. Bitcoin or any other crypto is not all of a sudden going to be some kind of replacement for fiat currency. Think about it. Businesses cannot do business with something that is so volatile and changes day to day. You couldn't conduct transactions that way. Same with any government. The U.S. government could not fund its operations with some kind of currency that is so volatile in its nature, which I'm going to circle back into in just a second. Bitcoin is also not a store of value like gold. That's one of the ways that it was marketed in the early days. And by the way, I'm not slamming any of its original folks who are touting a crypto in the early days. I think that they had good intentions, and that's kind of what they saw these things developing as, that it would be perhaps a replacement for the dollar someday, or that it could be a store of value like gold. But that's not the way that it's turned out to be, and I don't think it ever will be. Look, gold's been around for thousands of years. It has its place. Bitcoin is just this little pimple on the timeline of history, all right? We don't have any history about it. They say, the adherents to Bitcoin say, well, because of its scarcity, right? You hear that a lot. At some point, they can't mine any more Bitcoin. That doesn't mean anything. Look, I'm a baseball card collector, or at least I was when I was much younger, and I've kept all my cards. One of my pride and joys is the rookie card of my baseball idol growing up, Lou Brock, 1962 Topps card. Guess what? They stopped making those after 1962. There is scarcity. That value goes up and down, but just because my Lou Brock rookie card, which I love, has scarcity to it, doesn't mean that I can compare it to gold. It's not worth a half a bar of gold or anything like that, all right? So it's not turning out to be any kind of store of value. A third one that Bitcoin and cryptocurrencies are not is a hedge against inflation. We were told that early on, I think with good intentions, but it's not turned out to be that way. You go back, you can do your own research, you can look at the charts on this, look at inflation, compare it to Bitcoin. Sometimes they move in lockstep, many times they do not. So, what is Bitcoin potentially good for? Or what is Bitcoin? Notice that I'm not going to get into what really Bitcoin is and blockchain technology. Look, knock yourself out. You can go on the website and spend days learning about all of that. You can read books and white papers on it. I'm going to talk more about maybe some of the positive parts of Bitcoin that have turned out to be okay. So number one, I think, is a diversifier. We are all told about the fact that when you build out your investment portfolio to meet your long-term goals and needs, right? You should have a diversified portfolio. True. So you have your stocks and you have your bonds, you have a little bit of cash, a traditional allocation. But to really enhance it and lower the volatility is you bring in these outliers, these diversifiers, these non-correlated investments. So maybe you have a little real estate in there. You have some kind of commodities like the aforementioned gold, perhaps. Bitcoin or any other cryptocurrency is seen as a diversifier. This is not a recommendation. These are just the facts. And every study shows that when you add something that is non-correlated to a portfolio, even if it's really volatile, which Bitcoin is, it lowers the overall volatility of your portfolio. Sort of counterintuitive, isn't it? But it does work. Here's something else that I think that adherents to crypto can put their hat on today. Back in the early days, and for the longest time, it was seen as a fringe investment, way out there on the fringes. You had to be kind of kooky, maybe an engineering nerd to fully understand it. And so you could go on these chat rooms and you could hear what others had to say about this newfangled cryptocurrency craze and Bitcoin and other things. Well, it's not that way anymore now. It's out more in the mainstream. You have many financial institutions that might have poo-pooed the idea years ago. It's now on their investing platform. Not many, but it's happening in very incremental ways. You also have governments, hello, the U.S. government, hello, the Trump administration, now are adherents to that whole concept. And could that prove to be very, very favorable for long-term growth of that industry? Yeah, maybe, perhaps, but that is seen as a positive. So what do we compare something like Bitcoin to? I already talked about that we can't compare it to the dollar. We can't compare it to gold. Is there anything that if we chart it, that it looks similar to? Actually, there is. Take a look at this. What you are seeing there is Bitcoin in the red trend line over the past decade plus. The blue line is the high-flying NASDAQ. That's what you're seeing. Notice the correlation between that blue trend line, the NASDAQ, that tech-heavy, fuel-juiced index of some of the most high-flying stocks out there, a lot of your tech stocks, AI stocks, how volatile it can be, explosive moves to the upside, big crashes to the downside, and there's Bitcoin in the red going right along with it. Let me tell you something. I don't think the early supporters of Bitcoin and crypto ever thought that that's how it would play out. I don't think so. I really thought they believed it would be more stable, and that's not the way it's been. Again, 50 years from now, I have no idea. So, bottom line, my friends, I'm going to tell you the same thing as I tell all my clients, my outside friends, neighbors, whoever asks. Do you think I should ever put any money into a cryptocurrency like a Bitcoin? I shrug my shoulders and say, let me answer it this way. It can't be seen as a diversifier, a very volatile one. But whatever you put into it in terms of a dollar amount, if it did go to zero, make sure that that does not upset your financial long-term plans, because there are some really high-profile people who speak against it. Have you ever heard of this guy, Warren Buffett? Warren Buffett basically just laughs it off as being a joke. Now, before you toss him aside as being some old guy who doesn't get it, let me tell you something from someone who has followed Warren Buffett for many decades. The 46-year-old Warren Buffett would also have thought it was a joke, just as the 96-year-old does today. I think we might pay attention to that to some degree for the world's most famous and successful investor. And it's not just Warren Buffett. How about Jamie Dimon, the long-serving CEO of JP Morgan? He's been very public about that whole industry. He calls it a Ponzi scheme. He likens Bitcoin to a pet rock. Now, will Buffett and Dimon prove prescient in their calls? Maybe. Maybe not. Does Bitcoin go to zero or does it go to 1 million? I don't know. And anybody who says they know, remember, it's just an opinion. Even very smart professional people, It's just an opinion. We don't know. So please, folks, if you go into this knowing, like I just said, make sure it fits within your risk profile. I just did a podcast on this very thing. Please go back and look at it. It was a very recent one on risk profile and one glove fits all strategies, and just make sure that you understand that whole concept. Don't put so much into it that if the Warren Buffetts and Jamie Dimons are accurate, that all of a sudden your financial plan has been messed up. All right? So just remind yourself, there is a lot of hope and hype surrounding this whole industry. Just be reasonable in your approach to it. Nobody ever went broke by being prudent with their investing decisions. Folks, I hope that helps. I really hope you are enjoying these podcasts that I put together every week. If you haven't done so, hit that subscribe button, please. Pass that along to friends, and we'll talk to you again next week.